Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello, small business owners, and welcome back to another episode. I am your host and founder of Jetro, Mike Jesowshek. Today's topic is on what is bookkeeping and why do I need bookkeeping for my business? Now, before we get into that, this episode is brought to you by Jetro, a digital accounting firm servicing business owners across the country, helping them relieve stress around financials and save thousands in taxes. Again, today's topic is on what is bookkeeping and why do I need bookkeeping for my business? And I'm super excited for this topic because it's the first part in a new series that we're kicking off. This series is called All About Bookkeeping. And so we're going to do a multi-part series on both our blog and our podcast on bookkeeping, everything you need to know about bookkeeping. And so this first one is, what is bookkeeping? Why do I need bookkeeping for my business? And we get this asked a lot. And most don't understand the true value that bookkeeping can bring to your business. And so what we're trying to do in this series is we're set out on a mission to explain why you need bookkeeping and the importance of it and how you can use it to help your business grow. So just to start off, let's go really simple. What is bookkeeping? And let's look at a simplified definition of it. Bookkeeping is the process of keeping track of or recording every financial transaction within your business. You then take those transactions and that recording of transactions to create financial statements. It's important to note that every business needs bookkeeping. Bookkeeping of some sort, every single business needs it. And so again, I want to reiterate that simple definition. Bookkeeping is the process of keeping track of or recording every financial transaction within your business and then using that to create financial statements. So when we think about bookkeeping and these types of transactions, these financial transactions, we're going to look at a few main types that I want to talk about. The first one is bank and credit card transaction. Every transaction, whether it's a spend money or you're receiving money that goes through your business bank account or your credit card, needs to be assigned to an account or category. So for an example, if I go and spend $150 on a credit card to buy a new Apple keyboard, that would increase my credit card balance as well as increase my office expenses. So that's one transaction and it's we're coding it, we're recording that transaction to a specific category. So bank and credit card transaction is one type of transaction that we need to record, which is the act of doing bookkeeping. Another item might be invoices. So although it's not required, you don't need invoices to complete bookkeeping. Many businesses do send out invoices to their clients to ensure that they get paid and so that they can track various clients that they have not been paid from. So an example might be is client XYZ owes you $500 for services that you provided. You would create an invoice for $500 and send that to XYZ. That's an example of a transaction. Another one is bill. And this again, bills are not required to complete bookkeeping. Really, to complete bookkeeping at its core level, its bottom level, all you need is bank and credit card transactions and then some non-cash items. But these are items that just enhance that bookkeeping part. So bills. Many business enter bills to keep track of who they owe and when it's due. So you owe money for an electricity bill, or you owe money for payroll or for accounting services. You would create a bill to record the amount that's due and when that bill is due. And finally, another type of transaction would be non-cash or non-credit card type transaction. And this would be something like an asset purchase or a loan for your business that you took out. So let's imagine you go to a Ford dealership and you need to get an F-150 for your business, but you're going to take a loan out for it. So that is a transaction that took place, even though there may have, likely there was down payment made and things like that. But let's just assume that you just got vehicle in a direct exchange for a loan that you owe. That would be a non-cash transaction, assuming you didn't put any money down. And so that would be a transaction that needs to be recorded. You would create a new asset, which would be that vehicle, that Ford F-150, and then you'd have a corresponding loan related to that, which would be a loan payable. And then obviously, eventually, you're making transactions throughout the business to record payments towards that loan, as also as to get an expense for depreciation. But we'll talk about that later. So very, very simple. What is bookkeeping? A simplified definition is the process of keeping track of or recording every financial transaction within your business and then using that to create financial statements. So the next thing is, what is a bookkeeper? Do I need a bookkeeper? What is a bookkeeper responsible for? And a bookkeeper is responsible for completing the bookkeeping process, transaction recording, to create financials that can be used to help the business. So some of the tasks that a bookkeeper might do is gather supporting documents, or at least organize supporting documents. So oftentimes a bookkeeper will gather necessary supporting documents for those business transactions. This could be bills, invoices, receipts, purchase orders, credit card statements, bank statements, loan statements. They might take all these types of supporting documents and record them in a certain area within either your books or your accounting file. The next major thing that a bookkeeper does is record and classify transactions. So a bookkeeper will take the type of transactions that we talked about above, bank and credit card, invoices, bills, non-cash, things like that. They will take those transactions and assign them to their respective accounts or categories and make sure that they're recorded within the bookkeeping system. The next thing that a bookkeeper does is reconcile accounts. So once the recording is done and the bookkeeper has put in all of the, or coded every transaction to the right count and category, they're going to complete a reconciliation. And a reconciliation is basically just taking the data that was recorded and ensure that it matches the actual balances. And so I want you to think of this like a checkbook. You need to ensure that the balance you have recorded in the books match what's actually in the bank, or what's actually is your credit card balance, or what actually is your loan statement or your loan balance. If those do not match, then that indicates that something might be wrong or something might have been missed. And then finally, bookkeepers oftentimes create financial statements. So based on the activity that they recorded and reconciled, they'll create financial statements that can be used to help you and your business. And some of these financial statements include income statement or profit and loss, balance sheet, statement of cash flows, and so many more really financial statements are available. And we're going to dig deeper into some of the main ones in future episodes. So what does a bookkeeper do? They're responsible for doing the bookkeeping, which means gathering supporting documents and filing them, recording and classifying transactions, reconciling your accounts to ensure accuracy, and creating financial statements. Now, the big question that we talk about next is, why do I need bookkeeping? Why does my business need bookkeeping? Why does every business need or have to have bookkeeping? And I could go on for days on why every business needs bookkeeping, but I just want to talk about some of the major ones. And I often want to say, some clients say, I've never done bookkeeping for my business in my life. And I say, that's a lie. You may have just done bookkeeping, just didn't realize it. Or you may not have done it correctly, but you did some sort of your own way of doing bookkeeping, because every business would need that. So why do you need bookkeeping? Why does your business need bookkeeping? Here are some of the top ones that come to mind. Ensure accurate and correct tax filings. Tax time doesn't need to be this stressful piece. If you have your bookkeeping done and completed ahead of time, tax time is easy. You know exactly what your numbers are. You know that it's accurate because you're completing good bookkeeping. And so it helps ensure that accuracy. Bookkeeping provides clarity. It helps you understand how your business is performing and how your business, where you can improve on, where maybe you made a mistake in an advertising campaign that never panned out, or where you maybe had success on an advertising campaign. It helps you know exactly where your business is and how it's performing. Judging performance simply by cash in the bank is completely the wrong way to do it. There are so many other factors that come into bookkeeping that can change how your business is performing by simply where your cash balance is month over month. Bookkeeping helps you track profit or loss and any kind of liabilities you have outstanding. So in that example before, you might have $100,000 in the bank, but if you got $1 million loan outstanding, what does that mean to you? What if you don't know what your loan outstanding is? That's going to play a major factor on how your business is doing, how healthy your business is. That's why bookkeeping is important. Bookkeeping helps with cash flow assistance because you have an idea of when payments are coming in, when payments are due. If you're doing invoicing, you have an idea of when you're going to get paid. You have an idea of what bills are due and when you need to pay them by. You have an idea of how often or how quickly your customers are paying you. And you know if you've been paid or not, whether you need to chase someone down to get an invoice paid. Um, that's why you need bookkeeping. Here's a big one: cost cutting. With so much activity going on within your business, there may be items that are unnecessary, or maybe you just set them up on recurring terms. And bookkeeping is a way to help you analyze that and see where you can cut costs. I don't know how many clients have come to us with no bookkeeping completed. We had to do a bunch of back bookkeeping for them. And we're looking 2 years back and saying, here's what your income statement was looking like. Here's where your expenses were in 2 years ago. And they're looking at like, why is that software expense so high? So we dig deeper into it. They've been paying for a software for over 2 years that they have not used in over 3 years. This is where bookkeeping helps you see those cost cutting. It becomes apparent to you. You can see exactly where your costs are going. You can see where your costs were compared to last year. So it helps, we mentioned clarity before, but it helps with cost cutting as well. It helps you make better decisions. You know how your business is performing. You know what your cash flow is going to look like. You know what the healthiness of your business is. So you can make decisions. Do you make an investment into this new product or new line of business? Do you take out a loan? Bookkeeping can help you make those decisions. It's also, if you have investors or bankers or other third parties that are depending on you for financials, you need bookkeeping. You need to show them how you're doing. They're going to ask for this types of items. So it's easy for them to just say, here's how our business is performing. Here's our bookkeeping. Here's our financial statements. Here's how we're doing. Peace of mind. I can't tell you this enough. So many people are running businesses and just kind of on the whim of their seat. They're just taking things as they come. Bookkeeping brings that peace of mind. It brings that clarity. You can breathe easy with good bookkeeping, knowing that you're doing things the right way. You have good record keeping, and you know about everything going on in your business. You know that there's no one stealing money from you because you can see the bookkeeping. You can see the financials. You can see how you're doing. So peace of mind, breathe easy, less stress. And finally, another important one is avoid or win an audit. So bookkeeping can help you avoid an audit, being on top of it. But more importantly, in the rare instance that you do get audited, it will help you win an audit because the IRS knows that you're on top of it, know that you've been doing your work, know that you've been doing your homework, and things are accurate from the beginning. So those are some of the reasons on why you need bookkeeping, why every business needs bookkeeping. And like I said before, every business will do bookkeeping if they're filing a tax return of some sort. Now, whether that bookkeeping is done correctly or accurately or in the most useful way, that's a question to talk about. Now, earlier this year, we did an article on the top 4 bookkeeping rules to follow, and we had a podcast episode on that as well. So be sure to check that out. I think that was a couple months ago, back in March of 2020. So check that out. If you're just starting doing bookkeeping, these are some bookkeeping rules that you're going to want to follow. Make sure that you're taken care of. So again, this is just the start of our series. I wanted to start out basic, talk about bookkeeping. What is it? What do you need to know? And then we're going to dive deeper. And this is going to be similar to the S-Corp series that we just finished up. It's going to be week over week where we're talking about and continuing this discussion about bookkeeping. So again, just want to wrap up and kind of go through what we talked about today. Bookkeeping is the process of keeping track of or recording every financial transaction within your business. Types of financial transactions include bank and credit card transactions, any transaction that goes through your bank, any transaction that goes through your credit card. A transaction could be creating an invoice to get paid or creating a bill to know what you owe to somebody. There's also non-cash type transactions. These would be things like you get a loan, you buy an asset, you pull out any kind of other liability where you get something but you still owe somebody for something like that. These are some non-cash type transactions. And so you might say, what is a bookkeeper responsible for? Well, the bookkeeper completes the bookkeeping, which basically means that they gather supporting documents. This could be bills, invoices, receipts, statements, etc. They record and classify all those transactions that are going on within your business. They reconcile your accounts to ensure accuracy, and then they create financial statements. These could be a profit and loss or income statement, a balance sheet, a statement of cash flows, or any other financial statement out there based on the data that they entered, recorded, and classified. And then we talked about why do you need bookkeeping? Ensure correct and accurate tax filings. Avoid or win an audit. It brings clarity to you as a business owner. You can track profit or loss, and you can track liabilities outstanding. It helps you with cash flow. You know kind of what your expectations are coming up. It helps you find costs that you can, or cost cutting that you can complete in your business. It helps you make better decisions. And big one here is it creates easy reporting and really peace of mind. Having accurate bookkeeping will bring peace of mind, less stress to you as a business owner so that you can really focus on continuing that growth of your business. So again, this is our first episode. What is bookkeeping? Why do I need it for my business? So as we continue this series, send us questions. We want to tailor it as this series goes on. We want to tailor this to the exact questions that you guys have. Join us in the Facebook group and ask the questions there. And I look forward to talking next week where we're going to talk about debits and credits and cash versus accrual. And we're going to talk about the various financial statements, income statement, balance sheet, and things like that. So I want to thank you again for listening to another episode, and I will see you next week. Now, one last thing before I go. Don't forget to check out our podcast website at www.jetrotax.com. Simply click resources and then podcast, where you can go there and check out our past episodes. Also, don't forget to join our free bookkeeping training program and free Facebook group. I've provided links to both of these in the show notes below.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.